morning, everybody, and welcome to FOMC Wednesday. A lot of opinions, a lot of ideas, a lot of if then that. Like I said, when we went into the week, there is zero clarification whatsoever until we get into that meeting, which is coming at 2 o'clock this afternoon. And more importantly, between 2:30 and 4 o'clock, when Jerome Powell is speaking, considering this is a much different FOMC meeting than prior ones with what's happened there with the banks, we're definitely going to get some kind of clarification. And hang on. What is this? Jerome Powell's making an announcement right now. Hang on. I'll put you in on it.
First off, fuck your bitch and the click you claim. I am here today, despite the blackout before FOMC, to tell you regards not to pump the market. If you pump the market, I will have to bitch slap you on Wednesday. Let me take this opportunity to tell you that I already sold at the top. And me and my fellow Fed buddies are looking to get back in long once the market bottoms at 3,600. Yeah, that's the JPM collar put leg for those of you keeping track at home. Me and Jamie Dimon planned for this. So if you WSB twats pump the market Monday and Tuesday because you've been listening to Jam Crossant and Believe in Vanna and Charm Flows, I'm going to put on my Walker mask and come fuck your moms on Wednesday. Also, we are going to bail out the banks, but you fuckwads better not pump the stock market on this news. Okay, enough. I gotta go. I got an appointment. Nick from Wall Street Journal is coming over to suck my dick for some scoops. Always remember, fuck your puts, fuck your calls. Jay Powell has you by the balls. God bless my money printer.
You gotta have a sense of humor. You're alive only for as long as you are. Have fun while you're doing it. Two green closes. Closed green on Tuesday, closed green on Monday. Bad omen. I've gone over this quite a few times that you don't get to see three in a row very often. When you do, you really start hedging yourself for that overnight because you're definitely counting on a unicorn with a leprechaun riding it, giving away free beer that you're going to get four in a row. March 6th, March 3, March 2, Thursday, Friday, Monday, three in a row. Go prior to that, two in a row. You had your three in a row end of January, January 31, end of the month, February 1, FOMC meeting. Day after that, the 41.95 top. You all know what happened after 41.95. Two in a row. And here was that leprechaun riding the unicorn giving away free beer back in January when we had four in a row. Only had that, if I can check again, was in September when we went from 38.87 to 41.20, which we then sold off of on the CPI drop. And we also had four in a row the week of July 4. That's it. And that one there in January. So anyway, what I'll do here with you is I will quickly walk you through the email. I recreated the one from February. I will change this video here. And yes, that 135,000 September 15 QQQ 285 puts short at 1562, a $210 million short. As you know, we were already down at 285, 286, just prior to what this recent run was, which I'll show you. But yes, that person is still short. FOMC decision 4 o'clock. Jay Powell statement at 2 o'clock. And then at 2:30, he makes a statement, has the question and answer. Tomorrow, we get the Bank of England's rate decision at 8 a.m. We get the jobless claims. We get new home sales. We get Bullard on Friday. But I've thrown in a quote here, which came from my mentor. He shared it yesterday. With the S&P at 3970 this morning, the risk-reward ratio, 3,700, 4,100 range, is a negative 2-to-1. You got 270 points to the downside. You got 130 points to the upside. A rules-based approach is paramount to be dispassionate in your investing trading process. Now, I am in the March 24 300 puts. I could have flipped them twice. I held on to them. I'm bag holding. They are under $1. So they are what they are. I did go in and take the April 6 QQQ 300s and 305s yesterday, which I am very confident with because all the models that we've run through, my IT guy and all my Elliott Wave guys that I keep in touch with, we've all gone through the same models, and all of our models show that into the end of the month, into April, we're going back to the lows that we just came off of just a week or two, a week ago. We're going back to those lows. Fractionally lower, very possible, but every chart that we've looked through, Apple, Nvidia, Tesla, Amazon, Microsoft, Apple, they all have the exact same model to them where they all very much look as if in conjunction, we're going to revisit the lows from last week. So the FOMC February 1 meeting, it was a 111-point range, 112 points. We went down right there at the meeting. Bam, we were red all day, and then boom, the spike up and the close up there at that 41.19, which was our threshold going all the way back to September, that 4100, 41.19 area. February 2 was when we spiked all the way up. The Dow cratered, everything ran into the NASDAQ, and we went to our 41.95.44. From that 41.95.44, we had a 9.21% decline into March 13th. Now, where we are, the bulls need to close above 40.60. That's what they need. The bears are looking for something below 39.50 for that gap, and then quite a few other points to the downside. 39.44, very significant. 39.36, 39.27, and obviously we've got that 39.08 and very much more. There's a lot of work that needs to be done for the bears, but anything down below that low over here, we're going to be looking at a move that will benefit the bears and that view for the end of the month, beginning of April, revisit down here to 38.08, possibly fractionally lower to that 37.65. So again, here in your email, like I shared yesterday, to make sure that everybody knew, this is where your FOMC days were all of last year. Obviously, this is a much different FOMC. You've got your trend into the 2 o'clock meeting announcement and then the 2:30 press conference, so you can see what the results are from every one of those meeting schedule days. And again, bringing you in to show you that the lowest intraday range of all FOMC meetings going back to when this began in January of 2022 has been 88 points. And here are dot plots where I've got little arrows showing you where the FOMC meetings took place. That's where we're at right now. So, am I doing this? Yeah, cool. I thought that we weren't recording. Fuck 'em. No coffee yet. Saving my coffee for later on. So again, as you go into the pre-meeting trend, there's virtually nothing to do until the meeting. But having what we've got for our minimum ranges, I do have our upsides, 40.60, 4100, all the way there to 41.55. The downsides, 39.80, you saw it yesterday, 39.50, 44, 36.08, 55, 38.08, 65. Unless he does a half point, I don't see this cratering today. But if you do have a stop loss and you are in a trade at 2 o'clock, especially for you guys trading futures, you are going to get stopped out. You're going to get stopped out. So that's just the way that it works. But here I'm showing you where our the only two positive runs after the FOMC meetings, which were March and July. And here's where you were as far as your chart. And here's where you are right now. So again, not looking to go out there and start rolling some fucking crystal ball. But if we opened up here at 4 points as of 6:30, 88 points being the smallest range, 40.91, 39.15 would be your bare minimums from an FOMC point of view. Now, the SPX right now is implying a 55-point move for today. So it's definitely underpriced. But one of the things that I'm seeing here pre-market is I'm seeing 1,000 volume already on the 3,900 puts. There is a little bit of volume over here on the 3950s, 220. And then when you come over here to the call side, we'll try and find a match to that 1,000 if somebody's got a strangle going on, and I'm not seeing it. You got 250, you got 762 over here at 4,100. So far this morning, there's not a lot of action that's taking place, but this 1,000 over here on 3,900 is kind of sticking out, and it's trading at $2.40 right now. From a 4,000 point of view from where we open, being that the range minimum of 88, this isn't too crazy of what's taking place over there with that. So we'll leave it at that and bring you back over here and bring you back to showing you here with the CPCE. Came down here to 50 on Tuesday, on Monday. Monday it closed down at 50. You can see over all the way back, tracking back when you get exuberantly bullish, when you start breaking down below that 50 and especially down below into this 40 area, below 45. And that's when things tend to get really fucked up. Here you were over here at the top of March. You were all the way down here at 0.41. And again, the same thing on the upside. Once you start getting above 1, especially up into that 120 area, things are getting a little bit too bearish and you got a little bit of move coming back to the upside. So again, over here on CPC, looking over here at the put call ratio, and again, you hit right there on that 80 threshold, which is getting a little bit too bullish. And then all of a sudden yesterday it recovered because people were starting to hedge themselves heading into the FOMC meeting. So again, twice we ran in March and July. Those are the only 2 times that we ran. Sharing you here your SPY chart, obviously not looking fantastic, still continuing to get lower highs, depending on whether or not we can get that visit down to 390, 380, 379. I'm in the QQQs, like I said, because this is just fucking ridiculous. You have a 9% move to the downside over a month. And then when the banks start crashing, you get a 9% move to the upside over here. And on to the banks. Being that we are obviously covering everything that we've got here, I will leave you with this. Here is your SPY as you have there in your chart. Right to the 50 retracement back up to the February highs as we got there to 399.40. Go backwards, I think. Yes, and here's your QQQ. And you don't need to be a chart expert to look at this and say, this is FUBAR. Bring you over here onto the monthly, the SPX monthly, and just coming back just from 2018, showing you here how you have your consecutive red months. Red months consecutively here in your big month in March. Red month here in April, you had a doji candle in May, and then the red month here in June, and then you obviously recall your July into August. August and September being red months, and here we are at the moment, as of yesterday, green. We went green yesterday because we closed right above that 39.63.34. So again, everything does fit into a bigger dip right back down to around that 3,800, 38.38, 37.50, and then get our larger move to the upside, which we will be able to have from earnings coming in April. Coming over here onto the QQQ, and again, just coming back here to June. Here's your June spike high before you went down and posted your lower low. Here's the August euphoria. Here's your September spike before the CPI cratered us. And here we are. So we're banging on resistance. Banging on resistance over here on the QQQ. And to leave you, as we go into this very long day, the banks. I'll leave you with this thought. If they are deciding a way that they are going to go ahead and guarantee all the FDIC, all deposits in all banks, raising interest rates a half a point, just like Lagarde did, wouldn't be a terrible thing to do, because no matter what, you need to actually raise income in order to produce the ability to cover all those people's deposits. People aren't going to pull their money out of the fucking bank because they ain't got nowhere to fucking put it anyway. So theoretically, that 0.5 hike is on the table today, and if it did come out, we would get a quick 1 week shock, maybe a week and a half, go into that full moon, and be buying the hell out of that dip. But I'll leave you here with what happened with Credit Suisse. I hope you enjoy it. I'll see you guys in the chat room in the afternoon.
Y me llama el cocinero. Risita, ¿qué? Ve por la paellera. Venga, que las 2 de la tarde ya están aquí. Mira, el bañador, en las chanclas. Todo despeinado porque no me dio tiempo nada ponerme las chanclas y el bañador. Voy a la playa, había subido la marea. ¿Y tú? ¿Tú? Había subido la marea y encontré una paella. Y la encontré porque estaba la paellera agarrada metida entre las piedras de Chipiona, del faro. Y cuando entro en el restaurante me ve el cocinero con una paellera y a ver la vende paellera. ¡Asómate! ¡Mira dónde llega el agua! Llegaba el agua hasta el restaurante. Había subido la marea. ¿Y tú? ¡Ay, qué hacemos ahora! Con los 2 sacos de arroz. ¡Ay, llama para Sevilla! ¡Llama a Sevilla que traigo un país! ¡Ay! Tú y yo con el bañador con la paella. ¡Ay, el cocinero! No veas, para Sevilla. Y al último, que cuando ya salió la bien de regla, estamos llorando los dos. Me cobró el tío la paella. Me cobró a 500 metros la paella. Y ya no fui más. Me fui andando a coger los amarillos hasta hoy.